The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Thursday, the 22nd of December. Of course, we're getting real close to wrapping up the year. Now look at this. Let me just run these numbers quickly, and then I want to show you something really fascinating. Well, one of the techniques we always talk about. Within the Dow had a really strong move off the 200-period moving average, which it tested 3 times before yesterday's big gap-up spike and punched through the pink 9-period moving average, touching the 14-period moving average as a strong repellent, and it pulled back today sharply and took out yesterday's low, so it's now trading down 392 at 32,991. That's been the characteristic of these sudden big spikes up. You saw this one that went to the January, the first high. The day before there was this massive move up, and then we made that little top at 34,595. That's December the 1st, and then retested with a slightly higher 34,712 December the 13th high. That was where I looked at it and I said, look, the vertical test of the technicals on the 1st and looking at the week technicals on the 13th, that's not really good. And then the other thing that I was looking at is how the 200 period would hold as support. But it held as very good support for that big move up. But now there's something else that I have to be concerned about, and we'll talk about that as soon as I return. Let's just show you to the Dow. But in the meantime, look, here's the S&P. Hit only the 9-period moving average, not the 14 on that bounce, and now it's giving back a huge chunk. And this inside track repellent zone is just something I have to respect. The price of the S&P is not being able to close above. It's popped up above this long-term trend line. Remember, when I started working with all these different technical tools back after reading Joe Granville's book on balanced volume and doing some other thing, Jake Bernstein, when I started using when I stopped hand charting and went to the computer, and I started looking at moving averages thanks to him. And the other thing was I had a great fascination with trend lines because I kept drawing them, hand drawing them. I went back to the 1920 of the Dow, and I hand charted. I've still got them, hand charted all those, and I've got them on engineering paper. And even when I went to the computer, I still kept going. But most importantly, I found out that these trend lines are quite long, and you've already passed that point. But if you've forgotten about that trend line, it's amazing how suddenly that trend line gets hit later on, because time alone can move you towards that instrument that you're using. All right. So within that context, I have great respect for this technique that I developed just through trial and error, and I call it the Chapman Wave Inside Track Repellent Zone. In other words, I draw a little mini channel. The larger one in this case has the pattern that I call the falling X because it's got an expanding cone formation. Lower highs and much lower lows. This should be Technical Friday, but I want to do it today. I'm sure a lot of people will be away tomorrow, especially with Christmas. Anyway, I need to please wish everyone just a Merry Christmas, a Happy New Year, healthy. I think when you start to get on in age, you always talk about health. I'm talking about health. So anyway, this repellent zone has been magnificent. Look, even if you go to the QQQ, it touched it 4 times. More than 4 times, but 4 in the cup formation, the declining cup formation, and it went from the high that was made back in November in the weekly chart, in the week of the 23rd of November, over a year ago, at 408.71. Every time it had this very strong rebound, that rebound took you to a trend line, and within that trend line, you see the reason why I don't make it just one single line, it's an inside track. Sometimes the price gets in there, and if you were waiting to hit the trend line, you'd be missing completely. But if you use this 3/16 or whatever it is of an inch just this tiny little narrow channel. Instead of being a trend line, you've got two parallel lines and very close together. It gives you a little room, and it tells you within this zone what happens. Well, look what happened. In the zone, the QQQs have declined sharply. If today, instead of being now down 431 in the down 62 in the S&P, was just a mild, I expected the last hour of the gain of yesterday, usually a good portion of that is given up the next day. This is more than that because you also have to include the market news, whereas before the market news was bad economic news in the sense that it was higher than one would anticipate. Today, that news is having the opposite effect. So we are looking at a situation where the repellent from that peak D in a very quick, in the Chapman wave, if you go very quickly, peak A, peak B, peak C, peak D, it says, just be real careful. It doesn't say you got a major sell signal. It says you're going to give back some of that gain. And that's what you got in a weekly chart. This is one of the quickest Chapman wave buy signal to buy mode peak Ds that you can get. And it's a weekly chart. There was 2 bars up to A. But then there was only 1 bar for peak A, then it went to leg B, and there were 2 bars for B. 1 bar for peak B, leg C starts, 1 bar to give you peak C, and leg D, and now we've plunged underneath 5 weeks worth of work. So that just says to me, you've got to be really careful here, and that's why we've raised a lot of cash for subscribers to Moving Call. We're in certain areas, we're finding that if you're under the radar, it's good, and possibly in the maybe energy or other areas. The DBA Agricultural Fund, has actually had a really nice move lately. It was pulling back very sharply as wheat and grains were pulling back. So let me show you something else. IWM, here's the same technique. Look out, that's why I call this a zone. Look, 1, 2, 3, 4, 5, 6 weeks. It went into the zone. It didn't break out. And then this is the 7th week, and it's gone to an S at the end of the day on Friday at 4 o'clock. If this S remains, that means in the Russell 2000, you've just momentarily, at least, you've gotten a sell signal. But I have to wait for Friday because it's a weekly close. Don't ever do anything in the middle of a bar while waiting for it. Wait for it to fully complete, and actually it's even better to maybe wait for another bar to confirm it. Now, I just want to go through this real quickly. Gold is pulling back. We've been anticipating that this top is a high-level consolidation, and that there should be some kind of a give back within kind of a rectangle formation. 1791 on the continuous contract is the 200-period exponential moving average. That should be key support. And silver, let's just do silver, it's also pulling back. It's done really what it went to. I'm calling this a peak F for now. I can make that an alternate count. I don't see why. I've got everything saying that just on the near term, there should be some kind of consolidation. It's doing really well at 23.77, down 42 cents. But it is a leg D in the weekly chart. And as such, in leg D, that's where other things can happen. That's where you raise your foot off the accelerator, hover over the brake, and wait to see if it continues. But it's done fulfilled exactly the left side, right side bar symmetry that we were looking at the silver, and it's got to that level that we're looking at for the call of the 29th of April at 24.56.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, so as we were saying, silver's pulling back down 43 cents at 23.75. Looking at high-grade copper, high-grade should also be pulling back here. Yep, it is. It's within this rectangle. Remember, we look at rectangles, large rectangles, and I'm going to talk about rectangles in a moment because it's the key to the patterns that we look at least based on the Chapman methodology. That's a peak D in the weekly chart, but this went to a peak F around about the 14th or so of November, pulls back very sharply from the 3.90s, comes down to the 3.50s, makes a little U, a little arch formation, which changed to a U. There's big cup formation, which says the price should, if it makes higher highs and higher lows, then within a certain time frame, it should go to just under, right on, or just above the previous high. That's the flagpole high. That's this high right here. I should actually tell you I don't like to type the price in on the continuous contract. When I do, I have to make clear immediately that that's a continuous contract. That price changes. It gets smoothed out. But nothing else, the notation, nothing else changes, just the price. So that high of 3.963 on the 14th comes tumbling down to the 350s, bounces, makes a little arch formation, and goes right back. And the rule of thumb is that it could go in the same time frame. I used to say in a shorter time frame, but over the last 6 or 8 months, it's just been the same time frame that there's a rally that goes to a peak D, just under, right on, or just above the previous high. This went to a peak C, and it went to a peak C at 3.92, and the other one was, you remember, 3.93. And now it's pulling back. It's making another dreaded H pattern on the 200-period moving average, which is like a magnet. Isn't that incredible? So anyway, so now we're looking at the dollar. And I'll do this real quickly. There you go. Dollar. This is really, if you call this a rally, up 17 ticks, it's nothing. That dollar is in a more concerted digestive phase in its weekly and monthly charts. I've got a left side, right side price target of 101.30, and that's got another couple of weeks to go. We'll see if that's going to work. Yes, your Chapman wave inside wedge target support line. I didn't want to make it pink. There are too many red lines here, but that's that gray line there. Monthly chart is made at peak C. But this is going to be interesting because if you look at the UUP, and we've been long for 4 years, since 2018, it watched it go all the way up to the 121, then all the way back down. But the UUP, the dollar bull this is the instrument that they use, a fund, and it's still held all the way through. So now look at this. This went to an alternate count, peak F/C in the monthly chart. I have to consider both sides, because this market, the intensity of selling, even though you get lovely big moves, I mean, from the low that was made to the most recent high, certainly in the Dow, has been stupendous. So I'm looking at the big picture. I'm not a sanguine bull over the market. I'm looking at this as objectively as possible. We've got to get, until I get a major buy signal from a bottom. So far, these are great retracements to the upside. So let's just do this EUR, USD. There we are. Peak D, and we kind of in a holding pattern right now. That's at 1.06. It has met that peak D target. No, it just missed the target by just a tad. The high was that I was looking for was on the week of the 3rd of June, 1.078. But I always I bump up against the cliff wall on the left side to give myself a measured move. And that measured move says you've got until the week of the 13th of January, but it's already gone to a leg D and probably a peak D. We don't know. We've got a day and a half to go at 1.073. So it's already accomplished that part, but the MACD is very strong. Look, the stochastic in the euro dollar is flat at 92%. And this augurs well. It doesn't on the daily basis based on the MACD and stochastic, but it certainly does on the 9-period moving average, holding so well above the 14-period moving average. And look at the USD JPY. This is this is the yen. Big smash to the downside 3 days ago, trough F, and here it has done the left side, right side price. Oh, this is just like the dollar. It missed it by a fraction. 130.412 was the low of the 5th of August, the week of the 5th of August. I bumped up against the, I should have gone there. I bumped up against the Grand Canyon wall. That's how I like to do the measured moves in the beginning. So this also has about another week or two to go. Yeah, and it's already done almost to the tick. Look, 130.566 was the low and 130.49. Wow, it's within pennies of this left side, right side bar symmetry. In this case, I had to use it at a different level for the move up. There's always a particular candle that I use, but it made a kind of a doji candle with a silent doji candle at the top after the peak E was made back in October. Was that November? October, the week of the 21st. And that has made a peak F. So I'm looking at this and say dollar and yen. The yen and the dollar move not in the same price percentage moves, but in the same direction most of the time. So I'm watching this very closely. Here's the other thing I wanted to do is the TLT had a big spike from the low that was made at about 91.80 or something, and it spikes up all the way to the alternate count G/C right there on the 7th of December at 109.68, and it's pulled back. And over the last 2 days, today, in fact, in particular, the 9 has just crossed under the 14 to give you an S. The day is young, that can change, but it has given you an S saying on the 914 crossover, it's just giving you a sell signal. That's on the day so far. The day can close differently. All right, now I've done that. Now I wanted to show you something else. In my webinars that I give, I always talk about, and I've spent a lot of time on the narrow rectangle that can last a lot longer than your patience. So I have a large rectangle. You saw that just now. In fact, the large rectangle, we just saw that a moment ago. I don't want to go back. But look at this. The E-mini at about 510. Let me just do this correctly. This is on the 22nd. Yeah, 510 this morning. Starts a rally, and it goes peak A, peak B, peak C, pulls back, retests that low, but doesn't take it out. So it's still D. If it comes, it's still current, and it does go to D. And I did this in retrospect. This is the technique I use. I always like to go through the charts and do my notations, even though I'm not yet trading or I'm about to trade. I want to know what's happened. Well, it went to that peak D, and I drew in, what if there was a left side, right side price time match from that low to that high at D to the right. Well, it came in 3 bars late. It absolutely did. And then it took it out. And it plunged down to another. Look at this. A long, narrow rectangle can last a lot longer than your patience. It goes all the way from just after 5 o'clock to just after 6 o'clock. That's for an hour and a 1-minute chart. That's 60 bars. That's like looking at 3 months or more worth of daily charts. And now look at it, and the chart doesn't matter whether it's a minute chart or a daily chart or a monthly chart. They always look pretty much the same. So then it makes a low at 6. This one was active. I was already notating and ready for anything. And then what does it do? It gives a nice signal as the MACD starts to turn up. Stochastic makes a bottom, unbalanced one turns up, and it goes to A, but then it stalls. And then it goes to a B and stalls, and then it pushes up. And the 914 crosses positive, goes to another peak D, pushes back, holds the support line, and then goes to yet another peak D and drops. But that was another long, fairly narrow rectangle. Look at this very long, narrow rectangle here.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, so we're doing about very long, narrow rectangles. And yeah, look at this, from about 7:10 this morning, 7:30, between 7:10 and 7:30, it makes a trading band. And it stays in that trading band essentially between 38, let's call it 38, I think it was this one right here, 38.98, I think it was, no, 38.99. And the low that was made right there of 38.95. I mean, 3 or 4 points a trading range, that's, no, what am I saying? That's not 3 points. It was a little bit bigger than that. It was 98 to, yeah, I'm going to take the low, 92. So not bad, huh? For a long time, from 7 o'clock, and it stays in this rectangle, gives you all the Chapman notations, etc. You walk the 9-period moving average, and then all of a sudden it goes negative and it turns down. And then what's the rule of the long rectangle? The long rectangle says the longer it goes, if it eventually pushes to a peak D, maybe E or an F, just outside the border or right on the border of the trend line that you're watching for the upper resistance level of the rectangle, be careful, because if it takes out after that, if it takes out halfway into the rectangle, not only does it test the low of the rectangle, it can go all the way through. Well, it certainly went all the way through. But wait a minute, that was in the 38.90s. Look what happened here at the 38.70s. Long, narrow rectangle, and then all of a sudden, as the market opens, kaboom, it takes it out and it plummets. Well, it's not good enough. So now keep in mind that the long, narrow rectangle is I always say that in the weather, when at the beginning of the winter, we get our first snowstorm, if it's on a Thursday, there's a really good chance, and you can go and look this up, there's a really good chance that it stays that way somewhere around Wednesday or Thursday or maybe Friday. That's your day that you get the heavy snow, or you get something that's worth noting. And it's the same thing here in the market. In the market, the long, narrow rectangle is now, we had that when I was doing my webinar on Thursday, when was it? Last week. And we all of a sudden, out of the blue, just got this, and it lasted a long time, until 2 o'clock. Well, the trading band is what you need to monitor. That is a technique that is in the market. The market moves up or down or sideways. Sideways is a trading band, and it's a viable entity in your technical toolbox, your Sears and Roebuck toolbox. I don't know if anybody even knows what Sears and Roebuck is anymore. Anyway, or was. So look at this. Now it had another long one between 10 o'clock, and then all of a sudden it starts to take. And remember, my rule of thumb for a long, long time has been, yes, at peak G, other things can happen as well. But when you get to G, if you can, consider that it could be a G/C. Because on the upside and even the downside, so often it goes to a G, and that looks like it's over, but then it goes, if you think it's a G/C, especially if an instant restart before that, that says be careful, because it could go to D and then continue low. Well, D, E, and now we've got yet another A, B, C, D. This is an F right there, and we'll be watching this for the next little while. But in the meantime, back at the ranch, I wanted to show you this one, and this is really fascinating. I was looking at this. I happened to be notating this all the way through last night until I think it was just about, it was moving up right there in the 10-minute E-mini chart. It got to a peak C, and then I wrapped it up, but it actually went to a D. But look at this long rectangle formation. This is a 10-minute chart. So between 11:10 last night, Eastern time, the high of 39.15.75, let's call it 39.16 for now, and the low of 38.98. Look at this. Well, it might have gone just a tad above or a tad below, but look how long until it broke down, and right there at 6:20 this morning, it turned down. But wait a minute. I talk about this all the time. That is sometimes very difficult to trade the 9-period crossover. You need some other tools, and the reason why you need the other tools is it can get a little choppy. Look, it went short, long, short, just briefly right over there. But if at right there at 3:40, I wasn't up, but at 3:40 this morning, at 3:39.12 on the E-mini, when it crossed negative, if you had taken a short and put in just a 2 or 3 point stop, that short would still be active right now at 38.34 based just on that one technique. It's not easy to do. And the other thing about this is, wow, that means that at any point on the way down, you could have just shorted it because that pink was way under the 14. The 9 was way under the 14. Hard to do. hard to do unless you absolutely put in a stop and you say, look at how wide it is. That is not going to close positive for a long time. So that's the way I want you to look at it. Something I've discussed for subscribers, my opening call newsletter, and why we take our positions the way we do, etc. So I wanted to go through that. Within the context of Moderna, mRNA, I always call it Myrna. So within the context of Moderna, Michael wanted to know, he's looking at the long-term positions. He just wanted to get it. He's not a short-term trader. He's looking for the long-term positions. And my contention is this, that Moderna, unlike some of the biotechs, for a long time, they have a lot on their plate. Yes, they had the COVID vaccine, etc., but they have many other things. And like the old Eli Lilly or the old Merck, the farmers themselves, some of the biopharmers have very long-term, there are very long-term implications. The implications for the biotech looking out, not years, but decades, should be extremely positive. When they come up with drugs, they are drugs that are pertinent to diseases in such a way that hospitals and doctors and the whole medical industry really gravitate towards them. So I think they're in that area. So as a very long term, I don't know about 497.49, the high of August of 2021, at a peak F with a silent doji candle the very next month, and then it plummets all the way down to the double bottom at 115.61 in June, and then 115.03 with the H pattern that turned into a beautiful cup formation. That was the week of the 7th of September. I like it. So I think you've done your homework. You've done your homework. I don't know whether it's on a fundamental basis. I think so. But on a purely technical basis, I would like over the next 2 months to see the 9-period exponential moving average cross positive. That's the monthly. The weekly and the daily, they're all done that already. And the other thing is, because you've got long-term and shorter-term positions, the only thing I can say is, if I was to say to you, what would be the level that would make you a little nervous or make me a little nervous if I was long? And I would have to say, it would be, it's a 205. If it starts to close on a weekly basis under 160, but ironically enough, that would also be the place that says, now your risk is really light. So I like it. Let's look at it again every couple of weeks. All right, Dow is down 455, S&P is down 72, Basil, Chapman, Tiger Ignitions out. We'll be right.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, and the question came in, Camping World Holdings, CWH. And what was the question? How much room would you give CWH Camping World? Is it close to turn? Thank you. Peaky, I don't like this kind of pattern at all. This is one that I always thought the guy himself, I can't remember his name right now because I haven't seen him for a long time. I always thought that he produced really good results when he was on that program and CNBC, I think it was, when he takes individuals and he tries to turn their company around. I thought he came up because he always had a plan, and that was important. Now, it's TV, so a lot of what didn't happen is what you would not even know about because that wasn't advertised. And I thought, Camping World, he must be doing something right there. And he absolutely was, all the way into midpoint 2021. And then it made a peak D in the monthly chart around about the 49, 48 area. And then it turned around and it made a dreaded H pattern, won, and it failed. And now it's in a dreaded H right now. It's taking out the left side low as we speak. You can even see it in the weekly chart. There's this arch formation that goes from a lowercase h to a lowercase m, no sign of turning at all. And also, I don't think this is particularly the time of the year where they would see huge sales. I don't like this at all. I would not give it any room at all. And when you say give it room, if you are long or you've just gone long, I would just say, if you've held it all the way through to this moment right now, 20.79, and the low today is 20.55, I would much rather just exit with the money that I have, and I'd look at it again. I'd rather be buying it on higher highs and higher lows than lower highs and lower lows, because that's the trend. It's down. And that arch formation taking out the left side low, well, it's just done it right now. Let me just get out of this. I'll do it really quickly. We'll move over. There we are. So you can see if I do this, the pattern that I always look at for bar symmetry, number of bars on the left side to the number of bars on the right side. Look at this. You've gone up to that trough right there. That's green. Here's another one, parallel exactly. And look what happened. Boom. 2 days late. So this is green, and it's the pattern that we talk about, the lowercase h. Look at this this one. Oh, here's something that you got to keep in mind. If the H pattern is not from a peak A or B minus because it fails so quickly, but it goes to a D and even higher to E or an F, it says that you might be very close to a low and a bit of a bounce, but the selling pressure was negated by buying pressure, and the buying pressure is negated. It's like a neutrality as it gets back to the left side low. So I would say it's very close to at least a little bit of a bounce, maybe 1.5 points, 2 points. But this is I don't like it at all. So if you're asking me what I would do for, and that really was the question, how much room? I'd say I would have given it too much room right now if I was still in, because once it took out that left side low, That was the low of this is CWH Camping World Holdings. And once again, maybe someone's put in what his name is. Marcus Lemonis, right. And I mean, if he hasn't got this right, this is his own business, right? Something's very, very wrong. So I don't like it at all. I'd say, you know what? I get out 20. What if I have to get back in at 23.50 to 24? But now the technicals have improved a lot. Then it means that a 2-point gain should be very quick if that's the case. So even you've got in higher up. So I'm just saying, you could even keep a little bit as a kind of a bellwether, like a GPS to tell you exactly how it's responding to the market itself. But I don't like it. Okay, got that out the way. CWH. Next question was CLF. CLF is Cliff Holdings. Cliff Holdings, this is flat roll steel, iron ore pellets. It took over one of our positions that we once had, AK Steel. This one had a big spike to the upside. It looks fantastic if you're looking at it like that. It does look fantastic. It looks like, whoa, 200-period moving average is 17.59, and CLF is trading at 16.46, up $1.33. It must have had news, because a lot of the steels, as they get news, they spike high, especially if it's anything close to good news. Well, I'd done this. It made a peak after pullback. It gave a sell signal 3 days ago. We haven't got it. I'm just saying this is what I did with my notation, because almost every chart that you can see, I've done all the notations on the charts. This spiked up today. Now, I don't know if this is an old peak G, a leg G at the moment, or a brand new A. If it's a brand new A, you want to buy every single dip. If it's an old G, and this is the time in the Chapman methodology where you have to use many other factors. You can't just have a blind saying, oh, this is a big spike to a new high, recovery high. The MACD is turning up, stochastics good, on-balance volume. No, I need to do something. And what do? I say, is there a chance that we're stuck in a rectangle formation? And this is just maybe a larger rectangle? And the answer is absolutely. Look at this. It's just stuck in a rectangle. It's trading between the 17 level, 17.5, maybe even 18, and 13, basically. And it's been doing that for weeks and weeks and weeks. So in that context, what I want you to say is I would treat this as really important information, because the whole area of the steel SLX, look at this steel, look at that peak E at 63.67. That should have had a down arrow, went all the way back to the 200-period moving average. Now that's your line in the sand, 56.30, because it's like a magnet. It's going to keep dragging the price back to it, and if it pulls back under it, it'll try to come back. Look, for months, what a fantastic technique this is. Just put it on your charts. Look at this. It made the top at peak E back in August the 11th at 57.67. It then couldn't get rid of that 200-period moving average. It made the cup formation. It went there, and it couldn't go above. And then it pulled back, and it made the Chapman falling axe formation right there with lower lows and lower highs, lower highs and much lower lows. Eventually it turns around, and the little V-shaped pattern becomes a cup formation, and it goes back to where? Peak D at the 200-period moving average. It pulls back sharply, and then all of a sudden it gaps up. Same sort of thing on news. If this, and that could have been E/A. In fact, at the time I remember saying, is that an E or an A? And look what happened. It held support, and then it walked the 9-period exponential moving average until peak E at 63.67. That was around about a year ago. Around about right on December the 5th. And then it comes back down, and look where it is here. It comes back to where? The 200-period moving average. I mean, it's a visual. It's a GPS visual. You use it the way you use it. That's how we used it to get a very nice bounce in the diamonds the other day. We took our profits with that. We tried again today. We gave back some of the gain there. But, this is how 200-period moving averages work. So, yes, this is very important for the steel stocks, the whole steel sector, and CLF is very much part of that. So is STLD, Steel Dynamics, made a peak F. Look at this, big pullback in Steel Dynamics. Yeah, ex-US Steel, peak E, did a type of a retest from the 200-period moving average. Isn't that amazing? and it went to it's a peak C, maybe peak C1, C2. So yeah, be a little careful here. That's all. I'll be back. Dow's down 408.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, so a question came in, Basil, do you think the 10-year is topped out and next year we trade with the 2-handle? What I really think, if I look, I haven't got time to do that. I'll do it tomorrow, but I'll do it with my triple yield chart. I'll show all of that. But what I am thinking here is that the 10-year note is going to trade. The market is an interesting animal. I followed it long enough to know that at a certain point, what is intensive, it's as if you've got a barometer, and the intensity of the barometer goes up because of a news event. But the longer that news event just sits there, like the Ukrainian and Russian war, as long as it sits there, it is viable. It's the dark news cloud cover. It's this cloud in the sky, but there are just moments where it intensifies and where it doesn't. So my suspicion is yields are going to rise, but at a certain point, the market is going to accept that that's what it is, and it will trade within the confines of that new acceptance. So in looking at the yield, this is 3.654 right now. It's gone to a peak D in the monthly chart. It could pull back a little bit, but the technicals are so strong that I think that it will go higher. And I'd say 4.5 would be the next level on the upside. But 2.9, No, I think 3.2, if there's any give back in the yields, that 3.2, that 9-period moving average in the monthly chart will probably be it. So that's what I'm looking at. So within that context, you're about to go to Steve Rhodes, and great programming here at TFNN. Once again, just in case anyone's not going to be around tomorrow, have a wonderful Christmas and certainly a fantastic New Year. And there's great programming still to come. Check out my opening call, my daily newsletter. And tomorrow we'll have a pretty, I'm going to make it kind of a technical Friday, as I try to do. And we'll talk more about what's going on. So within that context, I'm going to say have a great day and see you tomorrow. Stay tuned for great programming.